Hi, my name's Robert Briscoe, and I had the responsibility of looking at 3M Company, just looking at their financial statements and their cash flow and other uh, some other categories as well. So first up is the cash. Actually, we can see that 3M's cash increased from 2016 or 2015 to 2016. Their cash was 1,798 million in 2015 and increased to 2,398 million in 2016. What this is going to do is it'll increase the firm's liquidity, so they'll see all of those liquidity ratios going up. The net working capital increased from 3,868 million to 5,507 million. The current ratio also increased from 1.54 to 1.89, and the quick ratio increased from 0.85 to 1.14. So as for inventory, the company just uses the lower of cost or market approach for valuing their inventory, and for determining a cost of goods sold, they're going to use a FIFO method. Well, this is for the cost of inventory. So for equity, we actually saw a decrease in the value of total equity from 2015's value of 11,429 million to 2016's value of 10,334 million. And this is just due to share buybacks. The firm bought back a net of about 13 million shares, which resulted in an increase in treasury stock on their statements. So in the consolidated statement of income, also known as just like the income statement, would be we can find that operating income increased from 6,946 million in 2015 to 7,223 million in 2016. This has actually been a long-term trend. It's really been increasing for the last 5 years, and this is just, if you look at their statements, due to a overall increase in net sales and a general decrease in the cost of goods sold. So as far as the earnings per share numbers, across the board, both basic and diluted have been rising over the last year. The major difference between basic earnings per share and diluted earnings per share is that diluted earnings per share are going to add in all the convertibles that are offered on those stocks, not just the common shares outstanding. As for net income, again, for the past 7 years or so, we've seen a general increase. The trend is very clearly positive, moving from 4,085 million in 2010 all the way to 5,050 million in 2016. And then moving on to the statement of cash flows, we can see generally that the operating cash flows have stayed pretty much the same throughout the years. These 2017 numbers haven't actually been released by the firm yet, so these are all just numbers from Yahoo Finance instead of from the annual statements. And for the investing cash flows, we can actually see that the firm has been gradually putting more and more weight into that. They've been increasing their cash flows from investing activities. And then on the contrary, we've actually seen financing cash flows be decreasing over the years. Finally, just a bit of an online valuation. Yahoo Finance's current price for the stock is $233.66. On MSN, their rating is outperform, and the reason that the 5 analysts gave it that rating is because their 2018 earnings per share estimates are $11.23, which is a definite increase from last year's numbers, and as well, their 5-year growth rate is 1.8%, which is going to be significantly better than the negative 2.02% that the industry currently holds. So that's it. Thank you.